Question 1. From a practical standpoint, Daniel, the owner of an electronics repair business in Anchorage, purchased a commercial property policy including a business income coverage form. A fire damages his workshop, rendering it non-operational for 3 months. While his building is being repaired, Daniel rents a temporary location at a higher cost and continues operations. However, he files a claim under business income coverage for his lost revenue and the cost. What is the most appropriate response from the insurer? A. The insurer must pay both the lost revenue and the increased rent under the business income form. B. The insurer is only responsible for the increased rent since Daniel did not actually lose income. C. The claim for lost income is invalid since operations continued, but the extra rent may be covered under extra expense coverage. D. The insurer can deny the claim entirely as business income only applies when operations cease completely. Answer. Correct answer. C. Explanation. Business income coverage under a commercial property policy pays for the loss of net income resulting from a covered peril that suspends operations. Since Daniel continued operations in a temporary location, no actual loss of income occurred. However, the extra rent qualifies under extra expense coverage, which compensates for additional costs incurred to avoid or minimize a business interruption. This is outlined as OCP 030, Business Income and Extra Expense Coverage Form. Denial of the entire claim would be incorrect unless extra expense wasn't included. Alaska follows NAICS standards which do not require total cessation to trigger extra expense if continuity was preserved. Question 2. In contrast to a full replacement policy, a policy that uses actual cash value (SCV) valuation will most likely A. Provide full reimbursement for the cost to replace the item without deduction for depreciation. B. Provide partial reimbursement accounting for depreciation and wear and tear. C. Cover the replacement cost only if replacement is completed within 30 days. D. Require the insured to obtain at least 2, quote, replacement cost before payout. Answer. Correct answer. B. Explanation. Actual cash value (SCV) is defined as replacement cost minus depreciation. Unlike replacement cost coverage, SCV does not reimburse the full value to replace the damaged property but adjusts for depreciation based on age, use, and condition. The indemnity principle, a foundational concept in insurance, ensures that insureds are restored to their original financial condition without profit. Alaska mirrors industry standard ISO forms, which support this principle. There is no mandatory quote requirement unless stipulated in the policy. Question 3. Given the circumstances, is Jefferson owns a farm in rural Alaska insured under a commercial farm property and liability policy. A wildfire damages both her barn and harvested crops stored inside. When she files a claim, the insurer informs her that the policy does not cover crop losses. What is the most likely reason for the denial? A. Farm policies never cover barns or harvested crops. B. The crops were not scheduled on the policy's declarations page. C. The loss was due to wildfire, which is standard exclusion. D. Only personal property is covered, not commercial farm property. Answer. Correct answer. B. Explanation. In commercial farm coverage, harvested crops must be specifically scheduled to be covered, while barns and farm structures are commonly included. Unscheduled crops are not covered unless an endorsement like a farm scheduled property endorsement ISO form FP014 is added. Wildfire is typically a covered peril under the basic or broad causes of loss. Alaska follows these industry standard forms. Denial based on exclusion would be incorrect unless the crops were never declared. Question 4. While examining the underwriting process, which of the following is most important for an underwriter assessing a commercial property insurance application? A. The applicant's previous employers and job history. B. The frequency of small unrelated claims in personal lines policies. C. The physical condition and security features of the insured premises. D. The proximity of the property to recreational areas. Answer. Correct answer. C. Explanation. Underwriters focus on physical hazards when assessing commercial properties. The physical condition, fire protection systems, and security measures are key determinants of risk acceptability. Sources of underwriting information include applications, property inspections, and prior loss history. Personal job history is irrelevant unless directly tied to commercial operations. Recreational proximity is minimal under relevance unless it increases foot traffic or liability exposure. Alaska's underwriting guidelines reflect NAICS standards and require risk evaluation based on material hazards. Question 5. When considering the role of subrogation, which of the following best reflects its purpose? A. To allow the insurer to recover a claim paid by reselling the insured's property. B. To reduce future premiums for insureds who agree to settlements. C. To permit the insurer to sue third party responsible for covered loss. D. To ensure the insured receives more than the actual loss amount. Answer. Correct answer. C. Explanation. Subrogation is the insurer's right to pursue third party that caused loss to the insured after the insurer has paid the claim. This helps prevent the insured from collecting twice from both insurer and third party and reinforces the indemnity principle. It also reduces losses for the insurer, keeping premiums lower. The right is typically granted via subrogation clause in the policy. Alaska statutes support insurer subrogation rights unless explicitly waived as per SS 1 36125. Question 6. Based on the information, Mr. Sanchez, an Anchorage contractor, stores valuable building materials on job sites overnight. He has a commercial property policy but wants to ensure these items are covered while in transit and temporarily stored at various locations. Which policy is most suitable? A. Business Owners Policy BOP. B. Commercial Inland Marine Policy with Contractors Equipment Floater. C. General Liability Policy with Property Damage Endorsement. D. Business Auto Policy with Physical Damage Endorsement. Answer. Correct answer. B. Explanation. The Contractors Equipment Floater, part of commercial inland marine insurance, is designed to cover mobile equipment and materials in transit or temporarily off-site. Standard property insurance does not extend to property away from scheduled premises. Inland marine policies fill this gap. General liability policies exclude property owned by the insured. Alaska aligns with ISO inland marine forms, and these floaters are commonly used in construction trades for tools and mobile assets. Question 7. In response to an internal audit, a commercial insurance producer discovers she has unknowingly used misleading advertising materials offering guaranteed approval for commercial coverage. Which violation is she most likely guilty of under Alaska insurance law? A. Rebidding. B. Twisting. C. Misrepresentation. D. Defamation. Answer. Correct answer. C. Explanation. Claiming a guaranteed approval is form of misrepresentation as it provides deceptive information about policy benefits and underwriting standards. Under SS 1 36110, this constitutes an unfair trade practice subject to license suspension or revocation. Twisting involves persuading client to cancel one policy for another using false claims. Rebating concerns unlawful inducements. Defamation involves harming competitors' reputation. Alaska's Division of Insurance strictly enforces these provisions. Question 8. Illustrated by the business auto coverage form back, which of the following designation symbols provides the broadest liability coverage? Here, symbol 7, specifically described autos. B, symbol 9, non-owned autos. C, symbol 1, any auto. D, symbol 8, hired autos. Answer. Correct answer. C, explanation. Symbol 1, any auto, provides the broadest liability coverage extending to owned, hired, and non-owned autos, including newly acquired vehicles, without the need for separate listing. It's ideal for insureds seeking comprehensive protection. Other symbols like 7, scheduled autos, and 8 or 9 are narrower in scope. The BAC FISO 01 is used nationwide, including Alaska, and understanding these symbols is critical for ensuring the appropriate coverage selection. Question 9. In terms of legal requirements in Alaska, which of the following is not a duty of the Director of Insurance? A. Conduct investigations into insurance fraud. B. Approve all claims settlements over $100,000. C. Enforce licensing regulations for producers. D. Examine the financial condition of insurers. Answer. Correct answer. B. Explanation. The Director of Insurance has broad regulatory authority under as SS.6, including enforcing producer licensing laws, initiating fraud investigations, and conducting financial examinations of insurers. However, the Director does not approve individual claim settlements, regardless of amount. That authority lies with the insurer unless broader regulatory concern is involved. Misunderstanding this can lead to confusion about the roles of regulatory and contractual obligations in the Alaska insurance system. Question 10. In the absence of specific policy endorsements, a commercial general liability (CGL) policy held by Glacier Tech, an engineering firm in Juneau, covers which of the following situations? A. Damage to a subcontractor's tools stored at Glacier Tech's warehouse. B. Claim filed by customer alleging emotional distress after service dispute. C. Bodily injury claim from third party who slipped and fell in Glacier Tech's office lobby. D. Property damage to Glacier Tech's own building caused by employee negligence. Answer. Correct answer. C. Explanation. The commercial general liability (CGL) policy coverage includes protection for bodily injury and property damage to third parties due to business operations. A slip and fall incident in the office lobby clearly falls under coverage A. Own property like the building is excluded, and emotional distress without physical injury is covered only under coverage B. Personal and advertising injury and must arise from specific offenses such as libel or slander. Tools of subcontractors may require inland marine coverage or a property of others endorsement. Alaska follows NAIC adopted CGL rules as outlined in ACG 01. Question 11. The evolution of insurance contracts has led to the widespread use of policies of adhesion. What is the primary implication of this characteristic? A. The policy can be negotiated by both insurer and insured freely. B. Ambiguities in the contract are resolved in favor of the insurer. C. The insurer must adhere to standardized endorsements created by the state. D. Ambiguous language is interpreted in favor of the insured. Answer. Correct answer. D. Explanation. A contract of adhesion is a take it or leave it agreement drafted by the insurer without input from the insured. As such, any ambiguity is legally interpreted in favor of the insured, reflecting the imbalance in bargaining power. This doctrine is upheld in Alaska courts and is embedded in common law contract interpretation principles. This also aligns with Restatement 2nd of Contracts SS, which guides resolution in adhesion contracts. Question 12. As evidenced by a recent audit of a commercial lines producer, she issued several temporary binders for property coverage but failed to issue formal policies within the specified time. Which regulation is most likely violated? A. Failure to remit premiums within 30 days. B. Breach of fiduciary responsibility to carriers. C. Unauthorized extension of binder validity beyond policy guidelines. D. Offering a rebate to policyholders. Answer. Correct answer. C. Explanation. Binders provide temporary insurance coverage, typically for 30 days, while the formal policy is issued. Extending a binder beyond this period without insurer authorization may constitute unauthorized practice of violation under Alaska Administrative Code 3 OC 23.210 is not necessarily breach of fiduciary duty unless funds are mishandled. Rebating is unrelated to the producer must ensure prompt issuance of permanent policies or face license suspension or penalties. Question 13. To determine whether coverage applies, is Liang reviews her commercial policies insuring agreement. What is the main function of the insuring agreement in commercial policy? A. Defines the terms and conditions under which the insured must pay premiums. B. Specifies what perils and losses are covered by the insurer. C. Lists key property exclusions and deductibles. D. Identifies the named insured property address and policy period. Answer. Correct answer. B. Explanation. The insuring agreement is the core part of the policy where the insurer promises to pay for specific covered losses under certain conditions. It outlines perils insured against, types of coverage, and policy intent. The declarations page, answer D, contains identifying details. Exclusions are listed in a separate section. Premium conditions are part of the conditions section. Alaska adopts the standard ISO forms, structure policies this way, including CP 010 for commercial property. Question 14. Taking into account the doctrine of indemnity, which of the following is inconsistent with its principle? A. Returning the insured to their financial position prior to a loss. B. Limiting payments to actual losses incurred. C. Offering full replacement value even if the item wasn't replaced. D. Preventing the insured from profiting from claim. Answer. Correct answer. C. Explanation. The principle of indemnity ensures the insured is compensated only to the extent of the loss and not allowed to profit. Replacement cost is only paid if the item is actually replaced, unless otherwise specified. Offering full replacement without actual replacement contradicts this principle and introduces moral hazard. This concept is foundational in both ISO standard forms and Alaskan insurance regulations, and it is embedded in legal interpretations of commercial policies. Question 15. When analyzing the function of a coinsurance clause, what is its primary role in a commercial property policy? A. Allows the insurer to cancel coverage if premium is unpaid. B. Encourages insureds to maintain adequate insurance relative to property value. C. Guarantees full claim payment regardless of insured amount. D. Provides automatic inflation protection to policyholders. Answer. Correct answer. B. Explanation. The coinsurance clause requires policyholders to insure their property to a specified percentage, e.g., 80% of its actual value. Failing to do so results in a penalty at claim time, which aligns the insured's incentives with maintaining adequate coverage. This clause is critical to risk pooling and the law of large numbers. It does not cancel coverage or provide inflation protection. Those features are governed by policy conditions and endorsements like the inflation guard. Question 16. In light of recent developments, cyber attacks targeting small Alaskan businesses have increased. Istacata, who operates a dental clinic, experiences a ransomware attack affecting patient files. Which coverage would best protect his business in this situation? A. Equipment breakdown coverage. B. Commercial general liability coverage. C. Cyber first-party coverage. D. Inland marine insurance. Answer. Correct answer. C. Explanation. Cyber first-party coverage is designed to protect against losses stemming from data breaches, ransomware, and system interruptions. It covers costs for data restoration, legal counsel, notification to affected individuals, and cyber extortion payments. CGL policies generally exclude electronic data losses, and equipment breakdown only covers physical failures, not malware. Alaska insurers have increased recommended endorsements or standalone cyber liability policies due to regulatory data breach notification laws under as SS.48. Question 17. With respect to the Alaska Insurance Guarantee Association, AGA, which of the following statements is true? A. It covers life and health insurance claims up to $1 million. B. It only applies when an insurer voluntarily exits the market. C. It pays covered claims if a licensed insurer becomes insolvent. D. It reimburses insurers for premium refunds. Answer. Correct answer. C. Explanation. The Alaska Insurance Guarantee Association, AGA, provides a safety net for policyholders of insolvent property and casualty insurers, not life or health insurers, according to as SS1 80070. It covers claims up to specified limits, e.g. $300,000 per claim when licensed insurer becomes insolvent. It does not reimburse premium refunds to insurers. Does it apply to voluntary market exits? Its purpose is to maintain public confidence in the insurance industry. Question 18. Focusing specifically on professional liability (EO) coverage, which professional would most likely require a policy tailored for errors and omissions? A. A warehouse foreman. B. An insurance agent providing commercial coverage advice. C. A janitorial staff member at a manufacturing plant. D. A delivery truck driver. Answer. Correct answer. B. Explanation. As and omissions (EO) policies are designed for professionals providing advice or services like insurance agents, consultants, or accountants. A misstatement or omission in advice can lead to financial harm for clients, exposing the professional to liability. None of the other listed occupations perform advisory or consultative functions requiring EO protection. Alaska recognizes EO under claim policies, and many professions are mandated or strongly encouraged to carry this coverage under professional licensing laws. Question 19. Among the various coverage limitations in a business owner's policy, BOP, which is most accurate regarding eligibility? A. Businesses with annual gross sales above $10 million are automatically eligible. B. Large industrial manufacturers are prime candidates for BOPs. C. Small to mid-sized retail and service businesses are typically eligible. D. Any business with more than 200 employees is disqualified. Answer. Correct answer, C. Explanation. BOPs are tailored for small to medium-sized businesses like retailers, offices, and service providers. Eligibility generally includes limits on revenue, square footage, and industry type. Large manufacturers or high-risk businesses, e.g., amusement parks, are excluded, while criteria vary slightly by insurer. Most BOPs use ASA BP03 forms. In Alaska, BOPs follow national standards and are designed to streamline coverage and pricing for qualified small commercial operations. Question 20. Contrary to popular belief, an employer in Fairbanks believes he can avoid workers' compensation by classifying his full-time staff as independent contractors. During an investigation following an employee's injury, the Alaska Department of Labor determines the worker was misclassified, which consequence is most likely? A. The injured worker must sue privately as no coverage was in place. B. The employer may be held liable for benefits and penalties under Alaska workers' compensation law. C. The worker will be responsible for their own medical expenses. D. The insurer must still pay benefits under the general liability policy. Answer. Correct answer, B. Explanation. Alaska mandates workers' compensation coverage under SS3 30045, regardless of classification. If worker is misclassified as an independent contractor, the employer can face civil penalties, back premiums, and personal liability for medical and indemnity benefits. General liability policies exclude employee injuries. Courts use right to control or test to assess employment status. The Alaska Workers' Compensation Board routinely enforces these rules to protect workers' rights and prevent insurance fraud. Question 21. Examining the consequences of inaccurate statements on an application is a Tran intentionally omits. For prior fire loss, when applying for a commercial property policy, later, a different fire destroys part of her business. How will the insurer likely respond under Alaska law? A. Deny the claim only if the omitted information is proven fraudulent. B. Automatically pay the claim as the omission wasn't related to the current loss. C. Cancel the policy retroactively and deny the claim based on material misrepresentation. D. File a report with law enforcement but pay the claim regardless. Answer. Correct answer, C. Explanation. Material misrepresentation, whether intentional or not, can void a policy under as SS1 42110. An insurer may rescind the contract if the undisclosed information affected underwriting or risk acceptance, regardless of the current claims cause. Intent to defraud enhances the penalty but isn't required for rescission. Alaska insurance law mirrors the common law principle that truthfulness applications is fundamental to contract formation. Filing police report is optional but not substitute for denial. Question 22. The relationship between covered autos in the business auto coverage form and liability risk is critical for commercial fleets. What does symbol 7, specifically described autos, mean in terms of liability coverage? A. It covers only newly acquired vehicles automatically. B. It includes all autos owned, hired, or non-owned by the business. C. It covers liability only for vehicles listed in the declarations. D. It automatically includes all employee-owned vehicles used for business. Answer. Correct answer, C. Explanation. Symbol 7 in the business auto coverage form ISO 01 applies only to vehicles specifically scheduled in the policy declarations. Newly acquired autos are not covered unless reported. To gain broad liability coverage, insureds typically use symbol 1, any auto. Symbols 8 and 9 cover hired and non-owned autos, respectively. Alaska recognizes these standard symbols, and coverage disputes often on whether a vehicle was properly listed at policy inception. Question 23. Historically speaking, the concept of the law of large numbers plays a critical role in insurance pricing. Why is this principle foundational to insurance underwriting? A. It increases the insurer's ability to select only high premium risks. B. It allows precise prediction of individual losses. C. It reduces variability by pooling many similar exposures. D. It guarantees insurers never face underwriting losses. Answer. Correct answer. C. Explanation. The law of large numbers is a statistical principle that states the larger the group of similar exposure units, the more predictable the overall loss experience comes. This predictability enables accurate rate setting and solvency planning. It does not predict individual losses or guarantee profitability. Alaska Insurance Law, like all U.S. jurisdictions, relies on this principle for actuarial justification of rates, required under as SS.39 rate filing regulations. Question 24. When presented with a covered equipment breakdown under an equipment breakdown policy, which of the following best describes the policy's intent? A. It excludes electrical damage from internal power surges. B. It pays only for explosion-related loss. C. It covers sudden and accidental mechanical or electrical breakdown. D. It is limited to fire-related boiler loss. Answer. Correct answer. C. Explanation. An equipment breakdown policy, formerly boiler and machinery, covers sudden and accidental breakdown of covered mechanical, electrical, or pressure equipment. This includes electrical arcing, ruptures, and compressor failures. It's broader than fire and explosion risks. The ISO EB 020 form is widely used, and Alaska insurers offer such policies as standalone or add-ons. This form bridges coverage gaps in policies, which typically exclude internal equipment failure. Question 25. Throughout the course of an appraisal dispute under a commercial property policy, both parties select their own appraisers. The two appraisers cannot agree on the value of the loss. What is the next procedural step under standard policy conditions? A. The claim is sent to court-mandated arbitration. B. The insured must select a different appraiser. C. The appraisers select an umpire to resolve the dispute. D. The policy is automatically voided for breach of condition. Answer. Correct answer. C. Explanation. The appraisal clause in most commercial property policies, including ISO CP 010, requires that if appraisers disagree, they select an umpire. If they cannot agree on one, a court may appoint one. The umpire's decision becomes binding if one appraiser agrees. This is an alternative dispute resolution method and does not void the policy. Alaska follows the standard ISO appraisal clause unless amended by NDOR or form filing. Question 26. The traditional approach to assessing liability in a deal policy uses the concept of an occurrence, but what defines an occurrence under standard policy language? A. Any intentional act by the insured resulting in injury. B. Continuous or repeated exposure to substantially the same harmful condition. C. Losses that are reported during the policy period regardless of occurrence date. D. Any claim arising out of errors in professional services. Answer. Correct answer. B. Explanation. An occurrence is defined in IS CG01 as an accident including continuous or repeated exposure to substantially the same general harmful conditions, but it is not based on when the claim is reported. That applies to claims-made policies. Intentional acts are generally excluded unless coverage exception applies. Professional service errors require EO coverage, not CGL. Alaska policies follow form definitions unless altered by endorsements. Question 27. The implications of failing to list personal property of others on the building and personal property coverage form became evident for Mr. Davis, who runs dry cleaning business. Fire destroys several customers' garments, but his insurer denies the claim. What is the likely reason? A. The fire was caused by an excluded peril. B. He failed to include customers' properties covered in the declarations. C. The property was intentionally damaged by Mr. Davis. D. He had business owner's policy, not commercial package. Answer. Correct answer. B. Explanation. Personal property of others must be explicitly included in the building and personal property coverage form CP010 and reflected in the declarations and limit selections. Failure to do so means customer-owned goods are not insured. This is critical for Bailey-type businesses like dry cleaners or repair shops. Alaska insurers require proper itemization of all covered classes of property. The peril is an issue. Lack of scheduling needs. Question 20. The core principles of contribution and pro rata liability are triggered when a. The insured fails to make premium payments, b. The insurer denies coverage under a reservation of rights, c. Two or more policies cover the same loss and same interest, d. The insured purchases duplicate coverage for different properties. Answer. Correct answer. C. Explanation. Contribution and pro rata liability apply when multiple policies cover the same risk, interest, and period. The loss is then apportioned among insurers based on their policy limits using the pro rata method. This prevents over-indemnification and aligns with the indemnity principle. Alaska insurers are bound by as SS1 42120 to use approved allocation methods, typically those in ISO forms. Duplicate coverage on unrelated properties is irrelevant to this principle. Question 29. In a modern context of insurance privacy, which law restricts an insurer's ability to share consumer financial information without consent? A. Fair Housing Act, b. Fair Credit Reporting Act, c. Gramm-Leach-Bliley Act, d. Health Insurance Portability and Accountability Act. Answer. Correct answer. C. Explanation. The Gramm-Leach-Bliley Act (GLBA) governs how financial institutions, including insurers, handle non-public personal information (NPI). It mandates privacy notices, limits on information sharing, and requires opt-out options. It is enforced in Alaska via as SS.1 and insurance-specific regulations. FCRI governs credit reporting. HIPAA applies to health information. GLBA is applicable to commercial lines producers who handle sensitive customer financial data. Question 30. A 52-year-old woman with a history of multiple sclerosis presents with progressive weakness and spasticity in her lower extremities. On examination, she has increased tone, brisk deep tendon reflexes, and a positive Babinski sign. Bilaterally, she denies recent relapses. MRI shows no new demyelinating lesions. Which of the following is the most appropriate next step in management? A. Start baclofen for symptomatic spasticity. B. Escalate disease-modifying therapy. C. Order lumbar puncture to assess for infection. D. Refer for surgical evaluation for intrathecal pump. Answer. Correct answer. A. Start baclofen for symptomatic spasticity. Explanation. The patient's symptoms are consistent with upper motor neuron-related spasticity, which is common in chronic. There is no evidence of acute relapse or new disease activity on imaging. Baclofen is a first-line agent for symptomatic relief of spasticity. Disease-modifying therapy is not indicated here, and lumbar puncture or surgical referral would be premature.